Hello everyone, welcome to today's session on accounting. Today, I will introduce you with the basics of accounting. Financial accounting deals with systematic presentation of the financial data. Financial accounting is the process of preparing financial statement that companies use to show their financial performance and position to people outside the company, including investors, creditors, suppliers, and customers. Now, what is the importance of financial accounting? Financial accounting helps in keeping track of financial transactions. The primary purpose of financial accounting is to document and record financial transaction, which is referred to as bookkeeping in accounting terms. Financial accounting is used by small business owners to document all of their company's commercial activities in the accounting ledger. All financial transactions are recorded using double entries in financial accounting. As a result, every accounting procedure has two sides, one being creditor and the other being debtor. Financial accounting is vital for business owners since it gives them methodical insights allowing them to describe their job and make appropriate decisions. It helps in comparison and analysis of financial data. Comparison and analysis are two techniques that commercial business owners may use to examine and research competitions and investment prospects using financial accounting data. The general principle of accounting control is financial accounting. As a result, a resemblance in the technique of generating financial data and information for multiple firms emerges, and this accounting aids in the calculation of financial ratios based on the company's own data and then comparison with industry rivals or standard ratio. It helps in information dissemination to internal parties. The objective of financial accounting is to look after internal users and to form the financial department as well as those persons whose jobs are dependent on issuing profits by shares. The financial data may be used by business owners to discover employee deficiencies and capabilities, and it can also be used to award employees for their productivity. Information dissemination to external audience. It also aids in commercial company owners in communicating accounting information to external parties who include both persons and enterprises that do business with them but are not part of their operations and are referred to as external audience of financial data. The ultimate outcomes of the financial accounting activities are shown in the financial statements. Users of accounting. The accounting process provides financial data for a broad range of individuals whose objectives in studying the data vary widely. There are three primary users of accounting information: internal users, external users, and the government, which is a specific form of an external user. Each group uses accounting information differently and requires the information to be presented differently. Internal users. Internal users are owners and managers involved in the day-to-day operations of the business and in long-term strategic planning. External users, prospective and current board member or investors. Has the company earned satisfactory income on its total investment? Should an investment be made in the company? Should the present investment be increased, decreased or retained at the same level? Can the company install costly pollution control equipment and still be profitable? These answers are very much applicable for the internal users. Then comes creditors and lenders. Should a loan be granted to a company? Will the company be able to pay its debts as they become due? Employees and their unions. Does the company has the ability to pay increased wages? Is the company financially able to provide long-term employment for its workforce? The next users are customers. Does the company offer useful product at fair prices? Will the company survive long enough to honor its product warranties? Then comes general public. Is the company providing useful products and gainful employment for citizens without causing serious environmental problems? Government. The government is a separate type of external user that is also interested in companies' performance, mainly for performance of collecting the proper amount of tax, but also for regulatory purposes. In fact, a single company may be reporting to several state and local governments and even to foreign governments, depending on where they are doing business. Now next we come to process of accounting. The first process starts with the identification of the transaction. Identifying the business transaction is the initial step in the process of accounting. The business entity has to identify financial and monetary transaction. Therefore, only those transactions that are monetary are recorded. Second step is recording of the transactions in the journal. After identifying the transaction, the second step of the accounting process is to create journal entry for each accounting transactions. The third step involves posting in the ledger. After recording the transactions in the journal, the individual accounts are then posted in the general ledger. The fourth step involves trial balance. The company's trial balance is prepared to check whether the debits are equal to its credit or not. The trial balance main purpose is to identify any errors made during the above process. The trial balance reflects all the account balances at the given time. The next step is the preparation of financial statement. After the company makes all adjusting entry, it then generates its financial statement in the next step. For most companies, these statements will include an income statement, balance sheet, and cash flow statement. Thus, financial accounting is a crucial business activity that enables specialists to comprehend their company's finances. Transparency, data-driven decision making, and increased profitability are all benefits of financial accounting. Thank you.